Hey folks, Leigh Saunders with Century 21 Soaring Associates. You see me all the time with Amanda Callahan, best in the business. I'd like to thank the folks at Angel Oaks for letting us use the Angel Oak studio this morning. Going to answer some of the very important loan questions here with Amanda Callahan at Angel Oak. Good morning, Amanda. How are you?
Good morning. I'm doing well.
Love it. Love it. All right, so we're going to get right into it. Here's what I want to ask you first thing. How does my credit score impact my interest rate? Why does that matter to me?
Well, so if you have a really good credit score, of course you're going to get the lowest interest rates available, which means lower payment.
Right.
You're spending a lot less over the life of the loan when you have the best interest rate. It also can maximize your buying power as well. So there's, a number of different reasons that, credit can impact your interest rate. And not only that, but if you do have PMI on your loan, oftentimes there's discounts when you do have a higher credit score.
All right, great. That makes sense. Now, if I don't have a great credit score, or if I want to improve my credit score, what are some things I could do day to day, week to week, year to year that could help me influence my credit score in a positive way?
So higher balances on like revolving trade lines, so like credit cards, equity lines, relative to what the limit is on those cards or equity lines. Usually I typically like to recommend keeping the balances down below 30-40% of the limit. That's something that's typically pretty easy and quick to report.
Right.
So I usually recommend paying down some higher balances on credit cards.
Right, so if I'm understanding correctly, maybe I have a credit card that has a $10,000 limit. I don't want to express that whole limit. That's really for an emergency. For me, that's what it means to me. So I really only want to, on like a $10,000 credit card, I really only want to use $3,000 to $4,000 of that credit. And if I'm carrying a lot, follow-up question, if I have a lot of open credit, but I'm not using it, is that helpful or?
Well, credit is one of those things where if you don't use it, you lose it. So it's important to have trade lines reporting to the bureaus and showing that you're responsible with them. So keeping lower balances, paying them off, paying them down, utilizing them, paying them down.
Gotcha.
Rinse and repeat.
Rinse and repeat, that's right. And as someone who a couple of years ago figured out that I was paying too much to borrow money, I really work hard and experience the credit score benefits of keeping my balances down. I definitely learned a great lesson from you with that. Can I get pre-qualified before I start going to look for a home? Why is that important?
That is important so that we can, of course, make sure everything qualifies, make sure the client is fully in the know and comfortable with the mortgage process. It also gives us time to really narrow down the options that would best fit what they're looking to do. And of course, it makes for a happy seller when we can provide a pre-approval letter when we are putting an offer in place. So it gives us a lot of time to make sure that everything is good to go for when they're ready to pull the trigger on a contract.
Absolutely, right? The more you know, and you can't just roll into your doctor office and say, what's wrong with me? You have to get a little information, you have to collect their information, find out where they're looking, and then qualify them, and then find personal programs. Because folks, everybody's unique, everybody's different. So that's why you need to speak directly to a lender about your specific situation before you start looking for a home, because you need to know. We don't go to Walmart without knowing what's in our wallet. Fair to say?
Yep.
Awesome. Next question is going to be, what are some loan programs that are out there for first-time home buyers? I think people think FHA loan product is a first-time home buyer product. That's not exactly accurate, but as a first-time home buyer, what are some of the programs that I can use?
Well, honestly, Lee, that is a question that I get asked all the time. And first-time home buyer products don't necessarily mean that it's meant for a first-time home buyer. So for instance, you could have somebody that has great credit, a sufficient down payment, and that does not mean 20%. I think that's a common misconception that you have to have 20% down. So it's ultimately seeing which of all would be a good fit for that particular client. So for instance, if somebody has 5% down or even 3% down, they might qualify for conventional.
Yes.
And oftentimes they don't think that they can.
Yes.
So it's all a matter of diving in, seeing exactly what we're working with, what is important to the client. So if it's low down payment, then of course we assess it from there. If it's no down payment. We have, options for that as well, but it's really truly diving in and seeing what is the best fit for each client.
So it's sort of one of those things, if I'm understanding, and we keep talking about this. You are unique. Your situation is unique. Your want and needs are unique. So you really need to meet with a lender and talk about your situation. I mean, there's probably 20, 30 questions or data points that come into play when we're thinking about your interest rate and how to qualify. So really, the best thing is always going to be connect with a lender, local lender. We encourage you to use a local lender, but to meet with a lender so that they can really get a full understanding of your situation and your needs, so that they can find the loan product that best meets your needs. Something else that you mentioned is, so there are loan products out there, 0 down, 3.5% down, 5% down, that are available with the right scenario, correct?
Correct, yep.
Gotcha. All right, awesome, thank you. When we're talking about what reasons can you point out that a buyer would want to use a local lender? I have my answers for this one as well, but why do you think it's important for a borrower to use a local lender?
Well, we know the community, right? So we know the regulations, we know the specifics of qualifying based on our market. So, of course, whenever you visit a new community, the first thing you do is ask the local what's the best things that you can do in that area, or give you direction.
What's the best restaurant? Where do I go for a cocktail?
Yeah,
right?
And so in our situation, it's really important, and I'll use the Coastal Carolinas as an example.
Yes.
So Coastal Carolinas, you're required to have wind and hail insurance. So a lot of times when you are not using a local lender, or maybe using an online lender, they don't know that until you're halfway through the process.
Been there.
So there's certain things, and that's just one example of why it's important to use a local lender.
Yeah.
But another reason that I think that is huge is the fact that the majority of us have local appraisers.
Yes.
And that is just as important, as far as our local community. When they're doing those evaluations, they need to understand our community, know the ins and outs of how our market works. And that is something that I think is very, very important.
I'm really glad you talked about the insurance thing, though, because I had a closing with a lender that was licensed in our state, but not familiar with our the nuances. That a couple days before closing, calls me and asks me about what wind and hail is. So unfortunately, all folks aren't created equal, and in the same way that you as a potential client are unique, Coastal Carolina is a unique area. We have people move in from other folks, and we just spoke with the insurance agent earlier, that don't understand flood insurance, that don't understand wind and hail, that don't understand the nuances of our area. And I think that, local folks have knowledge, understanding of the community, and really what's important to me and why Amanda is our go-to lender is that we know who we need to talk to and what we need to do to get it done. We do business with these attorneys, with these agents, with insurance agents, with other folks. We do business in this market all the time. And I think that one of the main reasons that I work with Amanda is because you're in the market, you're in your community, you're networking and talking to the folks that ultimately are going to benefit the client when it comes to the rubber meeting the road. And I really thank you for that. Makes it easier for folks.
I'm actually glad you mentioned that too, because that's another thing as well. When you're local, you have a reputation to uphold.
That's right.
And I think that drives a lot of our customer service as well, because we want to make sure our local reputation, if you will, is spot free.
And I mean, we know, hey, it's good to be important. It's more important to be good. But when we're being held accountable by our reputation in our marketplace, it makes everybody perform better. And it honestly, and this is really important to me in this industry, it raises the bar of what the standard is. So, it's with great pride that I call you my business partner. I think this is my last question for you. What is the coolest thing, or maybe even the craziest thing you've done to keep a loan on schedule, on program? Dozens of stories, I'm sure.
There's probably a few. I would say that, when someone gets halfway through the process and maybe they aren't working with a local lender, I had one fairly recently that unfortunately got halfway through, and they really love this home. It was their dream home. It was perfect location. Everything was just perfect about it. But unfortunately, the lender that was in place did not know the rules and regulations for that specific loan. Yeah. So they made their way to me, and I was able to get it closed. And actually, I was able to use one of our portfolio loans to do it.
Portfolio loans, that's great. Let's talk about that for a minute. So what products do we have available for folks that are self-employed, I guess 1099?
Well, we have a number, Lee.
A number, and it's 1099.
So we have a number of different portfolio loans, and I actually have been diving into them recently, and
Right.
they're actually a lot easier than I would have expected, considering it's the mortgage industry. So one of our most popular loans is our bank statement loan. So, for instance, if folks do not qualify based on their tax returns, which most traditional lenders are going to require tax returns, right?
Right.
So let's say, most lenders are going to go off of what you tell the IRS you make. So if you made a great deal of money and very successful, but you might write off the majority of that, oftentimes it's hard for like self-employed folks to get mortgage loans. So what we do is we made a loan that basically what you do is you take their bank statements. You calculate all of and this is very vague, obviously there's more to it than this, but you take what they've made or what has been deposited in their accounts, add it all up, and then we of course take a certain amount of business expense
Right.
and we deduct it from that.
Got
and
it.
we use that for income. So that's a way that a lot of our self-employed clients are able to get into a house.
Right.
And so that's just one of the many. We have investor loans where we don't need any income documents or anything like that, and it basically is qualified off of the cash flow of the property.
All right, so it's cash flow. It's because I know that if we loan you this money, the rent, the revenue you get from it's going to cover the note and be positive. Okay.
You are correct. We also have one, mortgage lenders are heavy on reoccurring income.
Yes, we love
So-
reoccurring. Consistent reoccurring. Right.
So we also have one that is an asset loan. So basically, if you don't have reoccurring income and you have a certain amount of funds set aside, you can utilize that without having to get income.
401k?
It can be a 401k.
Wow. So like if I've saved up, and this is a joke, I've saved up $350,000 or something in a 401k that I can leverage that asset as collateral versus a purchase. That's great. I want to go back to that first loan for just a minute that you were talking about specifically for 1099s, and I want to talk about my experience with that. So one of the things is if you're bold enough to get off salary and start a company or start to work for yourself, that entrepreneurial spirit that is what our country is built on. One of the disadvantages is if you're a couple of years into it, you're building a business, so you're not making that dollar, right? So let's make believe that in your business you bring in $80,000 your first year, which is a lot of darn money, but because you're building a business, you're not capturing a lot of those funds, but that income's coming because you're spending the money building a brand. It sounds like that loan would be perfect for somebody when they first start out building their own business. Is that how I'm understanding that?
Yes, however, the one catch with that is they do have to own that business for at least 2 years.
Okay, so 2 years.
But yeah,
but then
so
you get through 2 years and that it looks like that loan product recognizes that the income and the profit are not going to be consistent with the market because you're building a business. Everybody knows it takes more money to start something up than to keep going. Okay, excellent. And that was the experience I had when I purchased a property after joining, going into the 1099 land myself. One of the things we talked about today is that everyone's situation is unique. These conversations are anecdotally, so any details or specifics for you, we'd have to get into those for anything to apply to you specifically. How many folks are you hoping to help buy homes this year? What's your goal?
145.
145. Wow, that's awesome. And how are you doing?
I am on track.
Awesome. And more importantly, not just the volume, but how's your customer service scores?
Excellent.
Boom, through the roof. That's what we're talking about. That's what we're talking about. Customer service, taking care of the client. We do all the brain work so that you guys get to experience the home, fall in love, and have us in the background getting you the home.